market structure fans, it's Tim Quast for Market Structure Edge, ahead of earnings from Tesla and Microsoft. So let's take a look at how the Market Structure Edge platform will look at both of these. Here's Tesla, clearly a momentum stock. The way we look at that is it has a lot of 10s. Stocks that are hitting 10 out of 10 overbought are continually running into supply constraints, but that's momentum. It is interesting to note that when it's a 10, it tends to stop rising, even if it's only fleeting, and then it resumes rising when sentiment bottoms. So you can see that all the way across. So where are we ahead of results? Well, it's a 10 out of 10. So that tells us that the likelihood that it can continue to sustain gains diminishes. Now, come down to short volume, the other key pillar that we spent a lot of time looking at. Let's go back. So here it was 60% short, and no question it got some of the gains because of a short squeeze, forced covering. You see right ahead of results that this is happening again. So traders are telling us they're straddling. The traders believe Tesla is going to rise on results, but sentiment tells us it's going to have a very hard time keeping those gains. That's what the data tell us. So now let's go to Microsoft. I put them in the FANGs plus bucket, the same with Tesla, because they have similar characteristics. And you'll see, here Microsoft also has a lot of momentum characteristics, spends a lot of time at 10, although that's been waning. And if we look at those two key things again, sentiment. So here, the green line is market structure sentiment for Microsoft. It's the lowest at any point across here. Oversold stocks tend to do better. Overbought stocks tend to do worse, just relative to the broad market. And so if sentiment is bottoming and short volume is very low, then those are pretty good signs. If you had to pick one, you'd say Microsoft has a statistical probability of gains here coming out of results. Now, look, that's an 80% statistical probability. That also means that there's a 20% likelihood that it's wrong. But this is how to use the data, and it gives you a really good, unique basis for understanding how stocks will behave, because the one thing that all stocks share in common is market structure, and it influences them more than anything else, including their financial performance.